All right, so unless you've been living under a rock for the last few months, then you definitely know what's going on with AMC and the squeeze potential that's there. I kind of wanted to go over a few things today that's been happening in the market, as well as a lot of the news that's been coming out, and kind of break it down with my thoughts and my ideas on it, and kind of go from there. And we'll actually do a technical analysis here at the end just to kind of look and see where we're at as far as our progression, and see if we're any closer to where that promise point is to give us the squeeze that's going to make us all rich. So jumping in here, first thing you probably want to ask, are we about to squeeze? Is there squeeze potential? So let's just ask Google real quick. Is AMC squeeze near? Let's see what they have to say. Is there an AMC squeeze on Google? With AMC opening up, it's inevitable that the company will begin to see bigger sales revenue, but a short squeeze not happening is very unlikely, as AMC is currently the most shorted stock in the market and most held stock, beating both Apple and Tesla. So right there, Google tells you everything, right? So if that's all you wanted to know, there you go. But anyways, Google knows this, right? There's a lot of cool stuff you can actually find on here. I'm glad to see that Reddit's popping up right here at the top. As of today, right now, it looks like the stock is right at 968. So we're actually trading a little bit down. I'll go more into a technical analysis here in a minute. I just wanted to go over a little bit of the news that's happening right now. So first, AMC Entertainment slides as the CEO Aaron hints at new 500 million share sale. Now, I'm not going to lie to you guys. This really frustrates me. And I'll kind of explain why in a few different ways here. One is a 500 million share sale is obviously going to push the market down. So it really frustrates me. I'm not completely mad about it though, because generally a lot of times when a heavily shorted stock or a low value stock, sees an increase in value, a lot of times they'll do another offering or a share sale to try to raise more capital for the business to sustain it. And that's exactly what he's doing. He's trying to sell these shares to raise more capital and hold more capital for the company to help protect it in the future in case it hits any more rough patches, stuff like that. I can't blame him at all for that. It does really frustrate me though, because it's adding 500 million more shares to the market. That can definitely push us down. So it's definitely not a good thing. But I understand where he's coming from and I understand the point behind it. So I can't necessarily hate the guy for that. Now, what I wanted to get into is it's been going on and it's been all around is the SEC and the fails to deliver. There's actually a change.org has got a bill, getting started pretty much, where people are trying to force the SEC to manage this. It's their job and responsibility to manage the fails to deliver, and they haven't been doing it. And a lot of you guys don't know what a failed to deliver is. A failed to deliver means if I was to sell a call contract on a stock at say $10, the stock closes at $11. Immediately the broker is going to give the person who bought the call synthetic shares, 100 shares of the stock. And immediately they're going to place a call from me asking me to buy those shares to replace them, right? If I don't do that, that's a failed to deliver. So what it does is actually dilutes the stock because you're putting out synthetic shares that don't exist out there, that aren't out there. So anyways, I pulled up the failed to deliver and I pulled up the reports from just, the first half of March there, as you guys can see. And if you look here at AMC, it's pretty high up there. And I actually broke down this little thing here. I wanted you guys to be able to see it for yourselves. So the settlement date as of the 1st today, this is the QSIP number. This is the ticker symbol AMC. This is how many shares were failed to deliver. So what is that? 1,280,013 shares were failed to deliver as of today. So that's pretty huge. Now, once you start going in and you start looking at all the failed delivers in the past, this is off of the new Wall Street Bets on Reddit. I kind of copied it because he had already did the due diligence for me and went through each one of those months and looked at them here. Now, the only thing that kind of concerns me with this is I don't know how often the SEC updates these failed to deliver, so I would like to think that some of these have been settled or taken care of. Hopefully they're not still all what's outstanding, but I know that's a lot of the stuff that's getting scrutinized and everybody's worried about right now is these not getting taken care of by the SEC like they're supposed to. So they let it get out of hand until a lot of these companies are 5, 6, 7x leverage, and then they go bankrupt, and then they hope for a government bailout, something like that. Us retail investors, we don't get government bailouts, and I'll go more into that in a minute. But anyways, totaling all these numbers up here, the shares is 54,207,386 shares have been failed to deliver so far on AMC this year alone. Absolutely insanity right there. Now the total value for this is $222,117,643. That is an outstanding amount of shares failed to deliver. So that means as of right now, there very well could be 54 million synthetic shares on the market from these failed to delivers. That's absolutely given us a huge dilution. Once those shares start getting called, we start getting the margin calls, the forced calls like we just seen with Arch Egos. They're going to have to account for these 54 million shares, which is going to cause a significant spike in the price. Now, as I think, we are definitely fighting today to try to stay above this point, but as you look here, we've been on this long-standing trend line here for a while now, and we're actually holding it pretty tight. So I just want us to continue to hold that and continue to push up. We don't have to get to 20 today, anything like that. I'm not that worried about it. I just want us to continue to push up here, because if you go in and you look at the open interest on your call contracts for AMC today, how many are below that $9 mark? How many more shares are going to be added to that failed to deliver mark? That's what I want. So if I was playing this, you know, because I believe it is a good stock, I would definitely exercise all my calls and let them expire in the money and get them exercised, just so I have more failed to delivers, more push, more pushback on the SEC to do their job. That's what I want to see out of AMC stock price today. And the reason I say this is I didn't get into this as a get rich quick scheme or anything like that. Ideally, if I make money, I'm going to be super excited about it. But the overall idea about it is the lower class, middle class, the retail investor has been getting beat down by hedge funds for years. The rich get richer and the poor get poorer. And the way they do it is they do stuff like this. They will completely annihilate AMC by pushing the share price down to a point that the company can't sustain itself and ends up closing down and going out of business. So all of those people that work their entire life for the company are out of jobs. They lose their retirements. All the people who decided that it was a great stock and they put their investments or savings in there, those people lose their money. And the only people getting rich out of that are the hedge funds. So I 100% support the cause and the idea behind it. If you do too, please hit the subscribe and like button. I'd love to bring you more great content and stuff. If you have any questions, comments, please leave them down below. I'll be more than happy to answer them. I appreciate it. Keep up the fight, gorillas. See you tomorrow.